Okay, so let's talk about the today's topic. What are we going to talk about today? We are going to be talking about we are going to be talking about 1 to 4 unit. We need to. We're excited about the whole thing, but at the same time, we need to also be getting back down to the basic. So, what is the basic? The basic is our commercial funding business. So let me go to that funding business. So today we're going to talk about something very boring, but very necessary. It's called how do you invest in, how do you use business loan to invest in real estate? What does it mean? Basically, it means that how do you purchase a residential property using a business loan? Now, why do I talk about this? I have not been talking about this for about a year or so, a year and a half. Why? Is because for the last 2 years or so, if you remember, the interest rate has keep going up, keep going up, keep going up, keep going up. And we were at prime rate at the beginning of 2021. We were at 0% prime rate. By the end of 2023 last year, we were at what? 8.5% prime rate. So it was a huge jump. So again, the interest rate has gone up. Obviously, affect a lot of real estate professionals, realtors, mortgage loan officers, so on and so forth. It also affected a lot of bankers. Quite frankly, a lot of bankers lost their job. Okay. So, however, why do I start talking about this? It's because starting last year, somewhere around November, December timeframe, interest rates start to drop. It's not dropping a lot. At the end of October of 2023, on an average, if you're talking about purchasing investment property, I'm not talking about primary. We don't do primary. If you're talking about investment property, you go to a traditional bank, you need to put down 30% down, and you need the interest rate at that time somewhere around 9%. Okay, but today, if you go to purchasing the same exact property, now the rate can get as low as high sevens. It dropped so much. I mean, probably 7.25, seven and a half. We can get an interest rate like that. So this year, also 2024, it's an election year. So every time when there's an election year, the economy will be a little bit better. The interest rate will coming down. Again, they have to do what they have to do to boost the economy. So what we're expecting is that in the year of 2024, the interest rate will come down. Now, after the election, will the interest rate go up? We don't know. There's a huge possibility for that. So, but however, what we are seeing is that this year is positioned for the interest rate to come down. And last week, if you attended Jared's training, he pretty much said the same thing. Jared is one of our advisor. He is a lender himself. He came from lendingtree.com. He's very connected in this space. So he already see a lot of things is already happening. So that is why I want to go back to the basic to talk about 1 to 4 unit investment property. It's just because we can see there will be a lot of people going out there to do refinance again. A lot of people have been waiting on the sideline waiting for the interest rate to come down. And now this year is the opportunity. And a lot of the lender, quite frankly, even though the interest rate dropped, but from the bank is not going to lose up their underwriting guideline. A lot of the mortgage loan officer right here, you can testify that. A lot of the bank is not going to loosen up their underwriting guidelines. So which means that a lot of the client, when they purchase investment property, they still have to look for alternative funding like us. So that is why I want to share with everyone today about what 1 to 4 unit, refresh memory. If you heard me talk about this a year and a half ago, it's just going to be a refresh your memory. If you've never heard of something like this is a huge opportunity. It's just because this is how I got started. When I started the commercial lending, I fund fix and flips, and I fund non-QM, non-qualified mortgage like this. I'm going to share with you why you come to Sequoia to get a loan like this. So in this case, in this today's scenario presentation, I'm going to share with you what's going on in the market. Why come to commercial lending, use of business loans to fund projects like this? How do you apply for something like this? What is the guideline, so on and so forth? So let's talk about the market first. Why would people come to us to look for an alternative funding? A lot of people are asking us that, hey, Alan, what is your advantage when you compare to the bank, when you compare to a mortgage, traditional mortgage loan company, so on and so forth. So this is what happened. When you go to a traditional bank or a traditional mortgage company, they will need to look at your income. They will need to look at your income. Okay. But however, there's a lot of our business people cannot show income, not because they don't make money, but a lot of the business people, they do tax write-off. So when they show tax return, it does not look good. However, they make a lot of money. Now, again, I'm saying that these people are purchasing investment property, not primary residence. Okay. So now, because they cannot show income, the bank is not going to take it. They're going to reject it out. Number one. Also, many of them have challenging credit. When I say challenging credit, means that, hey, they might have a dent here and there. A lot of business owner, they forgot a payment here, they forgot a payment there, and they might have a credit card that's 30 days late, 60 days late, whatever that might be. So their credit is not the best credit out there. When you go to the bank, quite frankly, a lot of the bank, not only they look at your credit, but they also look at your what? They also look at your credit profile. If your credit profile doesn't look good, and again, they would kick you out. Here, coming to commercial lending, we have a lot of programs that can help credit challenging customers. Next thing is that some of the investors, they have so many different properties. Now, when investors purchasing investment properties, they don't just purchase one. They will keep continuing buying it and buying and buying and buying. They build up their portfolio. Now, a traditional bank, a Fannie Mae, Freddie Mac loan, it depending on which bank. Some bank allow you to have 5 properties. Maximum you can go to is 10. That's the maximum that I've seen. 10 properties. When you get outside of that box, or when you have more properties, then you would not be able to get a loan. It's getting harder and harder and harder to get a loan from a agency loan, because when the agency loan, they look at a ratio called DTI, debt to income ratio. So the more loans that you have, the more property that you have, the more debt that you have. Okay. Now, what do they look at? They look at your personal income. Your personal income is not going to increase. You're making $100,000 a year. You're not going to make $1 million a year next year. It's not going to work that way. So the DTI is getting worse and worse and worse, and hence the lender is not going to give you a loan. And also timing. Timing means that, hey, sometimes they need to close this deal in 20 days, in 10 days, 15 days. We also have a lot of clients come to us where they already been through an agency lender. It took them like 2 months, 3 months. They still cannot get the deal done. And now they're panicked. They come to us and we can get the deal done for them. So that is what the market is. Regardless what the economy looks like, regardless the interest rates, high interest rate, low, there's always this issue out there facing all the clients. So now when we come to commercial lending, what do? Okay, so what happened right here? So in commercial lending, first of all, we do not care about their personal income. Many people come to us saying, hey, Alan, I have this client, they make this much money. I say, hold on, I don't care about how much money they make. I don't care. Okay, it's not going to help me. They can make $2 million a year, it doesn't matter. Or they don't make any money at all. It doesn't matter neither. We do not look at the income of the property. So what do we look at? We look at the rent from that property, which I'm going to talk about later. So but what do we need to see? We need to see that they have down payments. Now, obviously, this is not an investment property. Even though you're purchasing an investment property from a traditional lender, they do require you to put down 20, 25, 30% down. A lot of people are saying that, hey, I just put down 10%, 5%. That is for primary residence. I mean, you can even do 3% down for primary residence. I'm talking about investment property. So as long as they can show that they have the down payment and they as long as they purchase the property not for their own use, meaning that they purchase the property for investment purpose, not to live in that property, and we can fund that all day long. So think about this. There's so many real estate agents out there are selling property for investors. Do they really care who closed the deal for their clients? No, they don't. As long as the deal is closed, they are happy. They make their commissions. Client got their property, and the deal is closed. So if we and quite frankly, a lot of the real estate agent out there have no idea we can even use a business loan to purchase investment properties. So if you can go to a real estate agent, let them know that, hey, I don't care about your credit score. Sorry, I don't care about your income. As long as you have the down payment, I can close deal very, very fast. That is music to their ear. So they have to purchase under an LLC because this is a business loan. We do not want them to purchase under their personal name. Setting up an LLC is pretty easy. It takes about 5 to 10 minutes online. You can do it online. And if they don't want to do it, they can find a CPA to do it. Very, very easy. Because when you put the property under an LLC, now it becomes a business loan. For you as a loan consultant, if you are selling a mortgage to a personal individual, that become a personal loan. You need license for something like this. But if for the same exact person purchase the same exact property, but under an LLC, you do not need license. And think about this. And all of a sudden, put yourself in a competitive position from all these loan officers that you know. For all these loan officers, in order for them to do something like this, they have to go through a lot of training. They have to go through a licensing. They have to go through compliance. They have a lot of regulations bind them. But all of a sudden, when you are doing the exact same thing but using a business loan to do it, you don't need none of those things. Can you see the opportunity right there? Can you see how many people can get involved? And you set up an LLC, you don't need a history on the LLC. You can set it up today and you use the same exact LLC to purchase purchase a property tomorrow. So there's a lot of flexibility on this, and also asset protection, meaning that, hey, when you purchase the property as an investment property under an LLC, there's a lot of tax advantage and also a lot of protection for yourself, which we're going to talk about it in another session. So now what do we look at? What do we look at? If this is, it does not matter if this is new, you are new to commercial lending, or you have been in commercial lending for a long time. It doesn't matter. If you want to become a professional, just remember this word right here, this acronym, DSCR, Debt Service Coverage Ratio. Many times when people come to me saying, hey, Alan, what is your interest rate? Or ask you, hey, Mo, what is the interest rate? Hey, Lou, what is the interest rate? What do you say? You say, what is the DSCR? They look at you like, huh? DSCR? What is it? What are you talking about? See, when you spell out things like this, it makes you feel, it makes you so on another level. They don't even know what DSCR is all about. But let me show you what DSCR really means. DSCR basically is the cash flow of that particular building or their businesses. Okay, so how do you calculate DSCR? Now, I don't need you to remember this, but for those of us who are technical, this is what DSCR is. DSCR basically is a formula. Your net operating income divided by all your total debt. So what is the operating income? If you are purchasing an investment property, the income is what? The income is your rent. You rent out that property for $1,000 a month, $2,000 a month, $3,000 a month, whatever that might be. So that income, it's your operating income. Now, what is your total debt? The debt including what? Property tax, insurance, management fees, and most importantly, mortgage. So now, if I know normally what does the lender looking for in terms of DSCR? They're looking for DSCR somewhere around 1.1. Some lender can go as low as 1%. So now I already know DSCR is 1. Let me ask you a question. When a DSCR is 1, is this property making money or losing money or break even? Can somebody say something in the chat box? Losing money, making money, or break even? Come on, somebody say something. I don't want to be just the one talking. Okay, just take a wild guess. Making money. Okay, somebody say making break even. Okay, making money, break even, making money, losing money. Okay, good. The correct answer is, let's say your income is $1,000 and all your expenses is $1,000. So $1,000 divided by $1,000 equals to what? Equals to 1. So is that property making money or losing money? Or break even? It's break even. You don't lose money. You don't what? You don't make money. But from the lender's perspective, the property value will increase. So as long as you do not lose money, then it will be okay. Then they will give you a loan. Now, in some extreme cases, some lender, remember, we are doing commercial lending. The lender's business is to lend out money. If they don't lend out money, they would not have a business. So they come up with so many different type of programs to help our business investors. So some lender is willing to go all the way down to 0.75 DSCR. Now, when the DSCR is less than 1, are you making money, you losing money, or break even? Type in the chat box. Losing money, losing money. Yes, you are absolutely right, losing money. But even though the property is losing money, as long as the investor is an experienced investor, some lender will still willing to give them a loan. It's amazing, isn't it? So what is an experience? Meaning that, hey, they own 1, 2, 3, 4, 5, 10, 20 properties. So that is why on our side of the business, the more property that you have, the better the rate and term would be. You will have a lot more chance to get a loan. But versus an agency loan, the more property that you have, what happened? The harder for you to get a loan. So that is why a lot of the investor, after they accumulate so many different properties, they have nowhere to go but us. We do not care how many property that they have. As long as that particular property, the DSCR is 1 and above, then we can do this deal. Okay, so Jamil is asking how many properties that we allow. Unlimited. We have people that owning above. We literally right now we're working on with a client that owns 60 properties. We have clients that own over 1,000 properties with many different LLCs. It does not matter how many properties that they have, as long as they can show what? As long as they can show down payment and the DSCR, we will fund all day long. Okay. So again, that is what DSCR is. I encourage you to remember what DSCR is. And if you, for those of us who cannot sleep at night, you want to find out more about DSCR, go to YouTube, search for DSCR. You will see so many videos that people talk about DSCR. But here, I just want to share with you what we are looking at, and that's how we price the loan. So now if we know that the DSCR is 1, we know that the income is $2,000, we know the property tax, we know the insurance. Now, can we calculate the monthly mortgage? Yes, now we calculate the monthly mortgage, and that is why we need to know all this information before I can tell you what the loan amount would be and what the interest rate would be. Does that make sense? So it's all reverse engineering to calculate that interest rate. So that's why a lot of people asking us, hey, Alan, what is your interest rate? I don't know until I know the following things. Number one that I need to know the address. Why? It's because I need to know where the property is. If the property is in a city versus the property is in a rural area, it's totally different. Okay. So I need to know the address. I need to know the market value. I need to know what is the market rent. Now, even though a property is vacant, but the investor saying, hey, I'm going to buy this property, I can rent it out for $2,000. At least I need to know what the market rent would be. Okay. And also, we need to know what the insurance and taxes would be. And most importantly, we need to know what the credit score would be. So those are all the 5 numbers that we need to know. Now, you don't need to remember all these. Just go to your scenario form. fill out the 1 to 4 unit investment property scenario form. We ask you all these numbers. So that is why it's very, very important for you to enter this number as close as possible. If you don't know what the tax is, guess what? Go to zillow.com. You don't know what the insurance would be, ask your client, ask the agent, or you can estimate it, right? So again, that is the information that we need. Now, once we have all this information, then we can price the loan for you. So now, guideline, what are we looking at? Number one, we look for credit score at least 640. Now, if the client is at 500 credit score, can we do it? Yes, absolutely, we can do it. But you're not going to get the best rate. You will get a loan, but the interest rate is going to be very, very high. So that is why if the client has bad credit score or challenging credit score, if they're not in any hurry, fix the credit first. And we have very, very good credit specialists in-house that can help us to repair the credit. Okay, so again, look for someone that is 640 and above. Purchase, we can fund up to 80% LTV. Purchase. If this is a cash out refi, we can fund up to 70%. In some cases, we can fund up to 75%. But again, I don't want to stretch out the envelope. So I would normally I tell clients about 70% LTV. And if it's a rate and term means that, hey, I'm not going to take any cash out. I just want to refinance the loan. We can go up to 75%. So today, in this year, I bet we will see a lot of refinance, a lot of cash out, okay? And because when the interest rate dropped, people will start to take money out from their equity to purchase other properties. Right now, as we speak, we already experience on a day-to-day basis, we have many phone calls from so many different clients and asking us, hey, can I get money out? Can I do this? Can I do that? So on and so forth, okay? So how do we, who is good for something like this? People that cannot show income. There are many, many, many people out there that cannot show income. Foreigners, they just come to the United States, they visit United States, and they say that, wow, I like this property, I'm going to buy it. No problem. As long as they set up an LLC here in the United States, and they can purchase property all day long using that LLC. Now, foreigners are a little bit different than citizens. Citizens, we can go up to 80% when you purchase a property, right? But foreigners, the maximum that they can go up to is 65%. Hey, that is the game. But they can get a loan, but they have to put down 35%. Portfolio loan. So some of you ask, how many property can you put together? It does not matter. So we are working with a client right now who owns about 60 properties, and we are going to put all the 60 property into 3 portfolio, 20 each. So to most of the lender, they do not like to have too many property into one portfolio. So the ideal size for any lender is about 20 properties. So why is it like this? It's because 20 property relatively is still pretty small, and it will be very easy for them to sell to the secondary market. But definitely we can do portfolio loan, and especially for those investors who has 10, 15 properties under their own name. You don't want your property under your name. Put everything into one portfolio loan under an LLC. Now, and another good thing about putting property under an LLC is that in your personal credit report, it does not show, that loan does not show up on your personal credit report because you do not own that loan. Who owns that loan? The LLC. And you are just the what? You are just the principal for that LLC. So the LLC is actually the note holder. You are just the guarantor. Okay, so that's why it will not show up on your credit report. Privacy, guys. Privacy is the key. You don't want the government to know how many property that you have. We also good for Airbnb. Again, Airbnb, a lot of people purchasing property to use it for short-term rental, corporate rental, Airbnb. A lot of the traditional company is not going to fund Airbnb, but we can fund that all day long. Okay. People that have multi-families. Multi-family, again, which means that you have one building with many units inside of it. If you are more than 4 units, you go to the bank will say bye-bye to you. But here, we do that all day long. And as a matter of fact, multifamily is one of the best investment assets out there today. It's what we call the tier one asset. The interest rate can go as low as 6.5%, even in today's market. Yes, for a stabilized property. Right now, we're working on an $11 million multifamily in New York right now. The rate that we quoted that gentleman is 6.75% for $11 million property. Bank turned down. A lot of them. That's why you need to work with a mortgage company. You work with a mortgage loan officer, work with a mortgage broker. That is why Mr. Gio Ramos is here. He owns a mortgage company. He does primary residence. If we are launching a primary residence branch head by Mr. Gio Ramos very, very soon. Very soon we will be able to do all 50 states. Okay, so that program is going to come out for primary residence. Just keep it in your pocket. We are going to announce that very, very soon. Okay, so again, bank turned down. What with bankers, what with loan officers, when they cannot get the deal done, bring it to us. We can close that deal all day long. So again, that is what happened with the 1 to 4 unit investment property. So two type of loans. Even though they're all called loans, but they're totally different, service a totally different purpose. It's just like, I like to use these analogies. A lot of people saying that, hey, when I go to agency, their rate is cheaper. I say, yeah, it's cheaper, but you have to provide a lot more documentations. Are you willing to go through that hassles? You are an investor. Remember, you are not a primary householder. You do not purchase that property for you to live in. If you're purchasing a primary residence, go to the bank. You can go through the hassles. But if you are an investor, are you willing to go through the hassles? Because they will look at all your documentations, all the profit and loss statements, so on and so forth. At the end of the day, they might not even approve you that loan, might not even approve you that interest. But come to commercial lending, we don't care about none of those things, which I just shared with you. All we care is that, hey, do you have the down payment? And do you have the experience? And do you have the DSCR to support it? As long as you can do it, we can fund it all day long. When we say that we can fund it, we can fund it. We do not play games. We do not have all these things that you do not see. And you go through days and days and month after all these underwriting, and they will come back to you saying, oh, Mr. Johnson, I cannot do that anymore. So that it's two different type of loans. It's just like a gas card and an electrical vehicle. Outside, it looks the same, but inside the system is totally different. It's totally different. So again, this year, I want everybody to come back to the basic. And I do see there's going to be a huge trend of refinance coming down the pipeline. Start talking to your realtors, start talking to your loan officers, start talking to investors, start going to all those investment clubs, whatever that might be, and let people know what kind of resources that you have. And SSBCFI is coming. So I suggest everyone to go join some sort of chamber of commerce, to join some sort of networking group that you let them know that, hey, you can, or some business association that you can fund small businesses. So that's all I have today, ladies and gentlemen. So let's open up the floor to see if we have any questions. So let's see. Let's talk about the chat box. Let me see. Wow, I have a lot of messages right here. Okay, awesome, California. Okay, great. Okay. Okay, very good, very good, very good. Okay, good. New York need more EV stations. Absolutely, guys. I mean, right now, Sequoia, we are actually in talk with a few EV installers, EV companies that can install EV stations. That very soon that we, as a loan consultant, we will be able to sell EV stations also. Okay, so when that day comes, we're not just selling the EV stations, but we also provide a solution for the business owners. Thank you, Jack. And by the way, Jack is actually another one of our advisor up in New York, and he also does primary residence. And we are going to talk about how to, push out this this program. New York needs EV stations. Alan, I send you today for funding a client. Okay, well, let's talk about it. Let's talk about it. And hey, any questions? Feel free. Okay. I don't see any questions right here.
Alan, it's Rosina. Let me ask you something really quick.
Yes, Rosina.
With the EV stations, because like you said, we're going to be going through the equipment loan with that. Will the EV stations need to have invoices too, or no?
Yes,
They will.
absolutely.
Okay.
Yes. So all they have to do now, the EV station works like this. When a client saying, hey, I want to install EV stations, they will contact some sort of install company. The installation company will go out to the site to do a site survey, where to install this and where to pull the cable, so on and so forth. And then after that, they will provide a proposal. So the proposal will show you what the labor cost would be and how many EV stations that they're installing and what is the total cost. So we do need to see something like that. Okay.
Okay. And what's the average? What do you think the average time would be from start to finish?
Oh, wow. I have no idea. Really depending on where that is. I think in California would be a lot faster because right now California is pushing all this kind of stuff. So you do need to have the permit from the city in order for you to install. And after you get the permit, you still have to order the EV station, so on and so forth. So a lot of this EV station is not made in the United States, actually made overseas. So again, that it really depending on where it is. So I'm not an EV station installer. So talk to
Right.
talk to the EV station installer, and they can give you a lot more info on something like that.
Okay. And one more really quick question. If a person has a property that is a personal property, is it possible for them to refinance the property into an LLC if it's owner occupied?
Yes, they can, but it's still owner occupied. We as Sequoia, we still do not do it. But again, we have partners like Gio and Jack can do something like this.
Okay. Okay.
Yeah. But
Alan, I had a question in the chat.
okay, Alita, what is it?
Ro, you done? Ro, did you finish?
I did, ma'am.
Okay.
Okay, Alita, go ahead.
When people buy the like 1 to 4 units, me being a real estate agent, sometimes the units are not up to, good condition. So can they get a renovation loan along with getting the, combined? You know what I mean?
Absolutely.
All right.
Okay, so let me show you. In your website, you see the website right here?
Yeah.
Okay, in your website, go to product.
Mm-hmm.
You see something called fix and flip?
Okay.
We do that all day long, and that is one of the easiest loans out there right now. So fix and flip, you have two type of money. You have the purchase money, and you have the renovation money. Okay.
Gotcha.
So depending on experience, let's say this guy got all kind of experience, I can fund you up to 90% on the purchase money. I can give you 100% on the renovation money. So combined together, the blended LTC, put it this way, the blended LTC is about 92%. Now, if the person have no experience whatsoever, this is the first time that they do a flip, that's fine. I can give you up to 75%, depending on the credit score, so on and so forth. I can give you 70 to 75% of the purchase money. I can always give you 100% of the renovation money. So the blended LTC is somewhere around 80%.
And that's even if they're going to hold it too, buy and hold?
That is the renovation fix
Okay.
and flip. And after you fix it, this type of loan normally give you 12 to 13 months. You fix it. After you fix it, then you will finance it to a long-term note. So that's why with one client, in your case, you can do 2 loans. Come on, fill up the pipeline. Fill up the pipeline, okay? Donald, I saw your hand raise up. Donald?
Yeah, I took it down. You answered my question. Thank you.
Oh, okay. Anyone else? What okay, what about money for rent? Okay, I saw that. Okay, fine. What is the safe time range to give client for credit repair? What is the safe time range? Well, if you fix credit repair, it really depending on how messy the credit score is. I mean, do you have bankruptcies? Do you have, a 30-day late payment, 60 late payment? Again, it really depending on the credit profile. I see sometimes you just do a rapid score, and sometimes I can see a credit score jump in about a week or two. And sometimes it takes about 6-7 months to get it done. It really depending on how messy it is. Okay, so I cannot answer that question. I see Attila.
Yes, Alan, I sent you an email today. Credit score was 840. They want to buy a property with 6 units on it.
I believe I saw that email already, and I believe that we responded to the email. So for 6 unit, that's a multifamily. We need to see the rent roll and we need to see the operating statement. So did you by any chance receive that email back?
No,
Check your spam box.
let me see. I'm in there now. Let's see if I haven't got
Okay.
anything.
So while you're looking at it, let's answer the next questions. Will this podcast be replayed? Yes.
Uh,
Okay. Okay. So sorry, Antilla, can you unmute yourself? So yes, all training will be recorded. So if you go to our website and you scroll all the way down to the bottom, you see this right here. You click on the YouTube icon, you click on it, and this is our YouTube channel. So all of our training is recorded and posted up here. If you're new to us, please, if you look at our channel, we have basic training, meaning that if you're new to us, you need to know how to make money. So this is the Complaint 6.0. You want to watch the commercial basics, so on and so forth. Okay, so this is our channels. Can we fund rural area? Yes, we can fund rural area. But depending on how rural, depending on what is the population, then the LTV will be ranging somewhere around 50% to 65% max.
I'm sorry, Alan, can you resend that email? Because I didn't get it. Thank you.
Okay. I will definitely ask this processing team to do so. Okay.
Hey, Alan,
Yes, sir. Who's this?
it's Mo. I
Hey,
just
Mo.
wanted to piggyback off of Dane's question just briefly. Dane, you will start seeing results for credit repair within the first 45 days. You'll start seeing some type of results. But typically you're looking at about 60 to 90 on the credit restoration. As Alan said, depends on what's on the file. But 60 to 90 days is what we're kind of seeing now, and using tactics and removing those negative items off the report.
Okay, great. That helps a lot. Thank you.
Thanks a lot, Mo.
No.
Okay, so Callie, that was my question for you. Okay, good. And Jeremy, what about daycare? Can you use a fix and flip for commercial property? Normally, commercial property, you don't do fix and flip. Normally, people will purchase a commercial property, renovate it, and keep that for themselves to use. So if a daycare, I'm replying your question right now, if a daycare already in business, they need to purchase a property, need to renovate it, and move their daycare into it, yes, we fund that all day long. And if they are qualified, we can fund up to 90%. 90% of the purchase plus the renovation. Okay? Victor, will a client have to apply for each property purchased after they do a fix and flip? Do they have to start a loan process all over again on the next property they will buy? Very, very, very good questions. When you come into fix and flip, the lender underwrite 2 entities. The first one they underwrite is the client themselves, because they do need to know if you have experience or not. So that takes time. Number 2, they need to underwrite that property that they're purchasing. So if this is the first time that they do business with us, the lender is going to underwrite both factors, and it does take a little bit of time. But once he does one deal with us, and now when he comes back, now it will become much, much faster, because we already underwrite this investor. We already know his experience. We don't need to underwrite him anymore for 6 months. Then all we need to do just to underwrite the property. So it will take much, much faster. So the first time that you do business with us normally takes about 3 to 4 weeks to get it done. But the second time they come back, probably in 2 weeks, we can get it done. Hopefully that answers your questions. Jamel, what if there are no late charge-off collections or bankruptcy, just high utilization on the credit? How can that be fixed? Well, one thing that I know, if that is the case, add another credit card to it. So let's say if a husband needs to fix the credit, and in that case, the wife has 2 credit cards, so have the wife to add the husband as the co-signer for the credit card. That will increase the credit. Hopefully, that will fix the issue. But again, we need to see the report to give you more advice.
Gotcha. Thank you.
Right. That's it. Okay. No more. Well, I see. Until your hand's still up. You have another questions? If no, anyone else?
I was asking, what did you tell me I needed? The rent roll and something else
Say it again.
on
I'm
that
sorry.
property?
No, what I'm saying is that you should receive email from us for a 6-unit multifamily. We normally ask for rent roll, and we ask for operating statement. So let's talk about that rent roll. Let's say you have 6 units. I want to see each unit. What is their rent for each unit? When is their lease expired? Hopefully you can put in the square footage. Some 6 unit, you might have 3 is one bedroom. You have 3, you have 2 is 2 bedroom, and you have 1 is studio. So we want to see what the configuration would be for that 6 units. So a rent roll is very important for us. So from the rent roll, what does it tell us? It tells the income, right? It tells
Yes.
the income. Now, what is the operating statement tell us? The operating statement tell us that, hey, what is your tax? What's your insurance? What is your management fee? So on and so forth. That tells us what? Tells us the expense. So now we
Okay.
can calculate the DSCR.
I believe I have most of it. I just don't have it singleized like you asked it.
All right.
Yeah.
Send it to
Thank
us.
you.
Anyone else? If not, we're just on time. So hopefully you guys got hopefully today's presentation give you a lot more information. I'm very excited about this year with all these new programs to get that coming down to the pipeline. And again, I don't know about you. Our goal is to get to 3,000 agents by the end of this year. All right.
And we're going to definitely get there for sure.
Absolutely. Absolutely.
Hey,
Okay, guys.
this Friday, Alan, just as a reminder, this Friday, we're going to have Benny Miller on our huddle. If anybody want to get your pastors for, we're going to talk about non-for-profit funding, churches and non-for-profit. We'll put that, I'll put it in on the page. So if you got pastors or people that have non-for-profits, you want to get them on that call on this Friday. We're going to have Benny Miller discussing all of our non-for-profit funding options.
Yes. So again, every Friday night, Mo is hosting a call every Friday night, 8 p.m. Eastern Standard Time. It is a much more relaxing environment. But one thing that I suggest everybody to do, definitely attend it if you have time, because Mo is a monster. Come to marketing. He knows what he's talking about. He can share with you how to market, how to talk to client. There's a lot of good information that he's going to share with you. So again, that is what this platform is all about. Every single one of us is willing to share with everyone what we know, and hopefully you can take it, learn it, and go out there, benefit yourself. Okay, so every Friday night, come to the G2 training.
How do you get to the G2 training?
It's on Facebook.
Yeah, we'll put the link in the post. Put the link in the Sequoia group. It's on my page. We'll send it out for sure. Just click on go into the Sequoia group.
Right. It's always
It'll be going out tomorrow. Yep. It'll go out tomorrow.
Thank you.
Okay, guys. Okay. Okay. Well, again, if nothing else, thank you so much for attending another episode. So we see everybody next Wednesday. Wednesday night is going to be Scott on the call. He will talk about the SSBCI program and how we can fund small businesses. Good night, everyone.
Thank you, Alan.
Thank you.